The industrial demand based on that is rising dramatically, double-digit percents every year, whereas silver production is flat at best and really declining slightly annually, year over year. And from what I understand also, China has really come into the Central American silver production and monopolized it. And I even understand that they've been paying prices for raw silver ore that's equivalent to purified silver. You know, they're really strongly demanding it. And it's not for monetary issues. It literally is. They're 80 to 90% of the production of solar panels, voltaic cells. So I think it is really a thing that will spring on the public. You and I know about it because we're in touch with the industry. But I don't think the average Joe on the street is aware of that. And it's one of those kind of things that could help separate silver from gold, because gold is monetary solely.
Tonight, we delve into a subject so dynamic, so potentially transformative, that missing out could mean watching the opportunity of a lifetime slip through your fingers. The stage is set for an explosive shift in the world of precious metals, and the key player isn't gold, it's silver. Market analyst Michael Oliver has just dropped a bombshell. Silver is primed to erupt, and the scale of this opportunity is 100 times bigger than anything we've ever seen. So, buckle up, because what you're about to hear could reshape your investment strategy forever. Silver, often overshadowed by its glittering cousin gold, has long been known as the poor man's gold. But as Michael Oliver points out, this label no longer does justice to silver's unique role in today's rapidly evolving global economy. Silver isn't just a monetary metal, it's the backbone of industrial innovation, the lifeblood of renewable energy, and the secret weapon behind some of the most exciting technologies of our time. Oliver's analysis reveals an undeniable truth. Silver occupies a dual role that sets it apart from all other precious metals. On one side, it's a reliable store of value, protecting wealth against inflation and economic uncertainty. On the other, it's indispensable for industrial applications. Think solar panels, electric vehicles, 5G technology, and medical devices. This duality creates a once-in-a-lifetime dynamic where industrial demand and monetary value converge.
And silver has this industrial aspect. And to the extent that uncertainty hits the world, and we think that's coming, stock market drop will facilitate that in some ways. Also, jeopardy of bond markets will facilitate that in some ways. A sense of nervousness. You know, I need to protect myself. Even here in the U.S., where families, well, like in Texas, they're tired of the repeated hurricanes knocking power out for 2-3 weeks. You know, so demand for solar cells, even in the U.S., is strong. I think the political instability we're about to see is something we predicted about a year ago. We can get on that later. Provokes emotion. And when stock market starts to break, that will really provoke emotion. Not just economic pain as rising commodity prices have done, but if suddenly you take 20% off everybody's retirement account or 30% off, they're getting hurt badly. They're bleeding from both ends. And that generates emotion. When you generate emotion, you generate factors that we don't normally incorporate into market analysis. You generate dynamics, downside for the stock market, and a movement toward things that make you feel comfortable. In the case of monetary, where you want to put your cash, what kind of cash do you want to keep it in? Bullion or paper that's evaporating in value? In terms of your sense of confidence that you have electric power tomorrow, you know, on a sense of instability. What the heck? $3,000, you can buy a generator that's solar powered that can generate most of your appliances. So even in the U.S., that demand could be sparked. But I think it's real. I think it's a real factor. And yes, it's been hyped within the industry and analysts like you and I. But the average public that's not a factor in their mind. And if all of a sudden you hit them with that gives them an extra excuse to favor silver over gold. And I'm going to suspect this. We think the advance in silver, which again wobbled today, continues. You take out the recent high, for example, at 35. Yet again, we do that. We make a high and, oh, goodbye, you know, and it's not goodbye. You take it out. We're at that threshold where if you get that silver gold spread up to that 1.3%, which to us is a neon sign saying, I'm going to accelerate. I think silver's going to take out its dual highs at 50 and do it in a flash. And once you do that, suddenly the public then wakes up, who've not been paying attention to silver. Their buddy has, their next door neighbor has, and he's been telling them stories and they didn't do it. And all of a sudden they have a sense of uncertainty. That's when silver gushes. And all of a sudden, I bet at that point in time, that's when those type of headlines.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
I can't deny that it's occurring, and we know in the past it's occurred. You go back to the 79 bull market in gold. The IMF was dumping gold by the tons, okay? Sale after sale after sale, dumping gold. And it initially in 79, as I recall it, I was in the futures markets then, there were sharp drops when the IMF would dump. But there was a point at which they would dump and it wouldn't drop at all. It would go up. Okay, so there's a point at which reality can't be distorted even by the superstate. Okay, they think they can, and yes, they do temporarily. And my son Brett has noticed that when you look at the hourly action of the S&P, of the silver and the gold markets, you look at this morning, for example. When do they beat it up? It's always in the dark. As you're about to go to daylight, early in the morning when they open the futures market, they've already dumped on the market during the night when trading is less volume. And you get these huge down hourly bars. But it always occurs like in the dark, when they can manipulate easily. Ultimately, that's going to backfire. And also stand back and look at it. I've got some charts showing year-to-date performance of the markets. And you see the S&P and the NASDAQ up 10, 15%, pushing on 20. They're backing off right now. They were near their highs. It wouldn't shock me at the end of the year. They're down on the year. But silver's up 35%, gold's up about 33% on the year to date. Okay, so despite the manipulation, which you can probably see in daily action, maybe today, for example, look at the gains they've made. So really, it's not working. If it were, gold wouldn't be up 30+% this year. Silver up 35. So ultimately, there's a point at which that manipulation doesn't work at all, and market just blows through them. And ultimately, the manipulation likely compresses the volatility that later is unleashed, where if reality is distorted and you've kept reality from emerging, when it finally does emerge, it's more volcanic than it would have been if you'd let it alone. Okay. So actually, it's probably bullish for gold and silver investors that the central banks think they can play that game.
Small portion of my paycheck and buy a few silver coins now and then to protect my purchasing power and to kind of store wealth outside the traditional financial system.
I think that stock market break, despite what the popular wisdom is among most investors, you break the stock market, gold and silver go down. That is simply not true historically. 2000 to 2002 bear market, the stock market, gold went up nicely, so did silver. 2007 to 2009, with the exception of 1 month in October of 2009, gold and silver went up sharply. When the stock market collapsed in October 2008, everybody said, oh my God, I sold gold too. Well, gold was ripe for a technical correction, even by our metrics then. It corrected quickly, and within about 4 or 5 months, it was back to its high. S&P kept going down through March of the next year, and it took it a year or two to get back to its high. So everybody's fixated on those momentary times where they could find 4 weeks here or there where gold went down with the stock market. They don't see the bigger picture. And frankly, this time it's different. If you generate that fear and you hurt people, literally hurt them, with the retirement accounts dropping 20%, 30%, and you give them a sense of fear on both ends, the cost of living and their savings are gone. I'm already getting emails from quite a few people saying, I'm moving from cash savings over to bullion saving. And, I think that's already going on. And when you crack that stock market and create the negative sentiment and the emotion that goes with it, people will seek something that's going up. Even if they don't quite understand why. Their buddy did it and it's working. They're going to move money into bullion savings where they feel comfy, that they know that their savings aren't going to deplete in buying power. But I think the stock market actually is a positive factor for that, not a negative. We shall see.
Setting the stage for silver to soar. A green revolution fueled by silver. The driving force behind this seismic shift? The green energy revolution. As the world races to combat climate change, silver is emerging as a cornerstone of renewable energy technologies, photovoltaic solar panels, which account for 80 to 90% of global solar production, are heavily dependent on silver. Every new solar panel installation, every corporate pledge to go net zero, and every government investment in renewable energy is driving demand for this irreplaceable metal. China, the undisputed leader in solar panel production, has been aggressively securing its silver supply. Oliver highlights reports of China paying premiums for raw silver or prices so high they rival those of refined silver. This strategic move underscores the urgency of silver's role in the green energy transition. And while industry insiders recognize this trend, the general public remains largely in the dark. But make no mistake, once this demand hits critical levels, the world will wake up to silver's value. Why now? The perfect storm for silver. Timing is everything in the world of investments, and right now, silver is standing at the crossroads of history. Global silver production is flat, or in some regions, declining. Meanwhile, demand is surging not just from the renewable energy sector, but also from emerging technologies like electric vehicles and 5G infrastructure. This classic supply-demand imbalance is creating a powder keg scenario, and when it ignites, the resulting price movement could be volcanic. Oliver believes we are on the brink of a major breakout. He points to the critical price level of $50 per ounce, a milestone that, if breached, could trigger a wave of retail and institutional investment. The psychological impact of such a move would dominate headlines, sparking a fear of missing out, FOMO, frenzy among investors. Imagine seeing silver prices climbing day after day while your neighbor casually mentions how they've doubled their money in silver. That's the kind of social proof that drives speculative booms, and it's already in motion. Market manipulation, the hidden barrier. Of course, silver's journey hasn't been without obstacles. Oliver sheds light on long-standing issues of market manipulation, where significant price movements occur during low-volume trading hours. But here's the kicker: manipulation can only suppress prices temporarily. Eventually, market fundamentals overpower artificial suppression, and when they do, the resulting price surge is often even more dramatic. As Oliver says, the spring is coiled, and when it's released, it will be explosive. Economic instability, silver as a safe haven. Economic uncertainty is another critical factor propelling silver's rise.